So today I want to talk to you about creating a cash flow forecast for your business. A cash flow forecast is a powerful tool that should not be ignored, period. Your cash flow forecast is all about predicting the money your business is going to need and when it is going to need it. Even if you have the best marketing strategy and the strongest, most capable team, it all means nothing if you do not have enough money to cover it, to cover them and your bills. Simply put, you never want your business to run out of cash. Your cash flow forecast helps you predict when your bank balance might be running low before it actually happens. What I want you to understand is that profit is not the same as cash. Profit is a buzzword in today's marketplace, but without positive cash flow, it means absolutely nothing. Zero, zilt, nada. Here's what you have to understand. Profitable companies can run out of cash, and they frequently do because of poor cash planning and cash flow management. Your cash flow forecast enables you to analyze your cash flow by providing insight on if your business bank account are shrinking or if they are growing. And of course, you want them to grow, right? The truth is, you can actually generate a profit and still have no money available. You see, your profit and loss statement is probably created on an accrual basis. And on the accrual accounting basis, it is going to show money that you've invoiced for. However, that does not mean you actually receive the money. So on your profit and loss statement, at the bottom of that report, it could actually have a positive number. But when you log into your bank account or determine your true cash balance, you may have a negative number, and that's what you don't want. So one thing I want to leave you with is that cash is the most important metric to watch in your business. Let me say that again. Cash is the most important metric to watch in your business. Once you are able to maintain positive cash flow at all times, generating a profit will become predictable. So what I want to do now is share my screen and show you how to create a cash flow forecast for your business. So this is the cash flow forecast that we're going to play around with. So as you can see, for your cash flow forecast, let's say you're going to create it on a weekly basis. You can actually create your cash flow forecast for the week by week, bi-weekly, quarterly, monthly, or even yearly. But let's say, or even daily, as a matter of fact. But let's say we're going to do your cash flow forecast for the week. And we're going to start with today's date, which is 11/20/2019. I got to do that right. 11/20/2019. Okay, so now with this cash flow forecast, I've created it to automatically identify each week once you put in your starting date. So we're starting on today and your beginning cash balance is $50,000, right? So let's say you have 3 primary clients in your business, and client A, as of today, week 1, they paid you $30,000. Client B paid you $5,500. And client C paid you $7,280.93, right? So for week 1, you started with $50,000, which is what you see here. Out of the total amount of income you received, you have $42,780.93. So the total cash available to start is $92,780.93. You're doing pretty good, right? But now you have cash outflow. The great thing about your cash flow forecast is that it's going to show you all of the money that's coming in and all of the money that's going out. Your profit and loss statement is only going to show you the revenue that you earn and the expenses that went out for a particular period of time. So in your cash flow statement for week 1, you have a loan that you have to pay, and you have to pay $30,000 for that loan. You also have the mortgage that you have to pay for your company, and that's $15,000. And then you have your employees, and you have employee B, and their salary is $3,000. So for week 1, you earned $42,780.93, and the cash outflow was $48,000. So you ended that week with an ending balance of $44,780.93. So that's what you're going to start with for the next week. So you start with your cash, that's your bank balance. You add in your income, you subtract anything that went out, and that's going to give you your ending cash balance, okay? So now we're on week 2. You didn't have any money that came in that week, and your cash inflow, just to make sure that we're clear, could even be money that you invested into your company. But for week 2, for the purpose of this example, you had a marketing campaign that you paid $4,000 for. You had telephone expense, and you had contractors that helped you for that week that you paid money for. So for week 2, you had a total outgoing cash of $25,500, but you had no incoming cash. So you actually end that week, according to this example, with $19,280.93. So now we go to week 3. Week 3, you predict that you're not going to have any cash inflow, right? But your cash outflow is time to pay yourself a salary. So you predict that you're going to pay yourself $20,000 in that week, right? You have software expense that are going to come out that week. And you have office supplies that's going to come out that week as well, right? You've done this cash flow forecast at the beginning of the week. Now you see that when you get to week 3 and have no money coming in, you're actually going to have a negative cash flow. The great thing about this is now you know this in advance. So now you can figure out what you need to do to either bring in more inflow or reduce the outflow that's going out. So do you see how great a cash flow forecast can help you in your business? It actually becomes an asset because now you're monitoring your actual cash inflow and cash outflow, everything that's affecting the cash inflow and the cash outflow. So do you have any questions? If so, leave your questions or comments below. And if you would like to create a customized cash flow for your business, then schedule your discovery session today by going to sayyes2profits.com/session. This has been Octavia Connor with Say Yes to Profits. Toodles.